Hi, and welcome to the Devon Weekly webinar. Great to have you along once again. Joined this week again by Mark Brown. Hi there, Brady.
Good.
You going well?
Yeah, good.
Great to see you again. Plenty going on, as usual, market-wise, particularly further afield and also, obviously, with the RBNZ meeting as well. But Spark New Zealand, bit of news on the tower sale or partial sale. What can you tell us?
Yeah, well, I mean, I guess it wasn't a surprise because it's been well advertised, I'd say, and they've been preparing work for some time. I thought what was newsworthy clearly was the price, which looked like a very good price for Spark shareholders. And I think the timing, I think it was a little earlier than we'd expected, but still good. So price-wise, why was it exciting? Really, it was a 33.8 times EV to EBITDA multiple, which is pretty eye-watering. You compare it with Telstra, which did a similar deal for towers, and that was only on 28 times EV to EBITDA. So I guess it's possible that a better price was paid because Spark will be growing into that network and growing the network, and it's going to use that TowerCo vehicle to roll out more towers for its 5G rollout. So it's possible. But it was a good price. Was it a total of $1.175 billion? They're going to sell 70%. That was interesting too in and of itself, because earlier indications were that they'd sell less. Remember, these are passive towers, so it's not the smarts involved in the towers. There's 1,500 of them. About 70% of them are macro towers. Those are the towers you sort of see standing up. They're pretty obvious. Then the rest is split 50-50, 15% on the tops of light posts and the other 15% on the top of buildings. So they're everywhere really, and they at the moment deliver the wireless that we see at the moment.
And the purchaser, Ontario, they've got a bit of experience with these assets. And how does it sort of work? So basically Spark gives up the rights to these assets but leases them back. Is that?
Look, to be honest, it's your traditional sale and leaseback that we all know, and so they'll sell 70% of these assets. It'll be bundled into a vehicle that's called a TowerCo, and they'll pay a lease fee to TowerCo, and clearly all of the new capex that will occur in TowerCo. So actually, it's also good from the perspective of it looks like at this stage that Spark's capex bill going forward will be lower because that capex will be done by TowerCo. So that, in theory, only have 30% of that capex bill as we grow into grow that 5G network.
Okay. And so what'll be happening likely with the funds? We don't know the split, do we? But there'll be some return to shareholders, a bit of debt.
Yep.
Management.
So we don't know yet, but what we do know is that whilst the full price was, as I said, 1.175, Spark will be receiving $900 million in cash. Now, to put that in perspective, debt's around 1.3 billion, so it's quite substantial. Remember, we sold these assets on 33.8 EV to EBITDA. Spark itself is only trading on about 8.5 times EV to EBITDA. So there's a real value uplift, some serious value accretion through the sale. But they haven't let us know yet, and I guess we'll have to wait till the August results announcement to see how they think about it. I can only imagine some portion of it will be used to retire debt, because of course they're very conscious on their investment grade rating. Some they've said will be kept to look at possible developments, possible acquisitions, possible growth capex, and then the other, may take some form of capital return, capital management to shareholders. So if we're thinking that this is a massive return to shareholders, I'm probably thinking that's probably less likely, given we need to retire some debt and we've got some sort of M&A or capital growth assumptions.
Sure. Well, obviously the investors appear to like it. You've done well on Spark, of course, in the portfolios. It's outperformed the market this year. You still see it as a bit of a safe pair of hands going forward, whether we get a bit of economic slippage or not, or
we can't look past that wonderful dividend yield, which is probably only around that 7.3% grossed up number. I think what we can look forward to now, though, is that probably growth in dividends. Dividends have been reasonably flat at 25 cents for quite a number of years now. So
Right.
I think looking forward, we should see some growth return to the dividends for Spark. But it is a low growth vehicle, a stalwart to the New Zealand economy, and let's call it recession proof, really.
And you just sort of put you on the spot. You've also got some other telcos, haven't you? You've got Telstra in the in the mix as well. Similar sort of story there. Of course, they've already done their sale, haven't they?
Oh, so it's an interesting point. So almost everybody is kind of copying Telstra. So Telstra was the first cab of the rank in trying to take some of those, let's call them incidental assets, and get get them in ownership that find them more valuable. But Telstra also has an infra development on the go. So they did sell some assets. You're quite right. It sold some towers, but they've got the rest of it. They've still got some assets to sell. And of course, Vodafone New Zealand is doing exactly the same thing, which sits in Infratil as its tower assets up for sale as well. So we'll see what happens there.
Excellent. Well, stable cash flows, and you've done very well on particularly Spark. So great stuff there. But thanks for those insights into Spark. Thanks for your time once again. I know you're pretty busy with presentations and the like.
Oh, it's quarter end.
It is quarter end. So look, thanks for tuning in again this week. So do get your questions in advance, or indeed if there's a topic you want covered in this webinar, do that as well. Happy to look at micro, and we'll also look at some macro from time to time as we have in the past as well. But we'll leave it there. Have a great day. Have a great rest of the week, and we'll catch you again next week. Bye for now.